Hello and welcome to today's lecture. Today we're going to be focusing on these two words, tax evasion versus tax avoidance. What is tax evasion and what is tax avoidance? These two words have constantly been used interchangeably, which is wrong. So we're going to be looking at the meanings of both words and what are some of the actions that can amount to either tax evasion or tax avoidance. Tax evasion is an illegal act. It's a crime that is punishable by law. So when someone talks about tax evasion, just know it is illegal. And you're going to be punished if you're caught doing tax evasion. The next one is tax avoidance. Tax avoidance is an act that is legal. It basically involves you taking advantage of the tax system loopholes to your advantage so that you can be able to reduce the tax liability. Moving on, we're going to be looking at some of the examples of tax evasion. One of the ways that one can be able to commit this crime is by claiming an existing dependence. If you look at a country like Germany, whereby if you're single, you end up paying a higher tax rate compared to someone who is married and compared to someone who is married and has children. So if you go to the tax revenue and you tell them I have a child, or you go to the tax revenue and you tell them I'm married, but in real sense, these dependents are non-existent just because you want the tax rate to go low so that your tax liability is also reduced, then what you're doing is that you're committing an act of tax evasion. The second way people commit tax evasion is by underpaying taxes intentionally. You know that your income was 1,500 euros or it was 2,000 euros, but you decide I'm not going to pay taxes based on this amount that I earned. You decide if I earned 2,000 euros, I'm going to pay my taxes only on 1,500 euros. What you have done is that you have underpaid your taxes intentionally, which is a crime. Moving on, the other way people commit tax evasion is by not disclosing full income. And like I said, you earn 2,000 euros, you decide I'm going to only pay taxes on 1,500 euros. What you're doing is that you're withholding information regarding your income earned. You're not giving a full disclosure of the income you earned, whether by cash, whether by check. So that is an act of tax evasion, which is punishable by law. The other way people commit this crime is by falsifying income records. So you earn 2,000 euros, but you decide, I don't want them to know I earned 2,000 euros. So you take your pen and paper and start falsifying your income records so that it will reflect maybe 1,600 euros or it's going to reflect 1,400 euros so that your tax liability is lowered. That is an act of tax evasion. Next up, we're going to talk about failing to file tax returns. Yes, failing to file tax returns when they are due is an act of tax evasion. The other way corporates evade tax is by paying employees in cash and failing to report or disclose these in their financial statements. So you end up paying your employees by cash and you either under record the amount of money you paid to your employees by cash, or you fail to totally record the amount you paid to your employees by cash. So this one reduces the amount of tax that is payable by the corporate, which is a crime of tax evasion. Finally, failure to withhold taxes. This is usually committed by also corporates because when you hire someone on contract who is not your employee, so you're actually supposed to reduce a certain percentage as a withholding tax, which the corporate should be able to remit to the revenue authority. So if they refuse or they fail to deduct this withholding tax, that is an act of tax evasion, which is punishable by law and which is a crime. So next up, we're going to be looking at some examples of tax When we started, we were able to give the definition of tax avoidance as a legal act which involves one or a corporate taking advantage of the taxation system loopholes so that they can reduce their tax liability. So how are corporates or individuals able to do this? One of the ways is relocating to countries with lower taxation rates. In a country like Kenya, if you have a company, the corporate tax rate is 30%, and that is if it's a resident company. But if it's owned by non-residents, the corporate tax rate is 37%. So if they decide to relocate the functions of these companies to other countries, which offers them lower taxation rates, it's an act of avoiding to pay the higher tax rates in Kenya, but in a legal way. So relocating to countries with lower taxation rates, that's one of the ways that people are able to avoid taxes in a legal way, which is not punishable by any law. The other way is tax havens. This is setting up a trust for foreign assets in an offshore. Thank you very much for your time, and I hope now you really understand what is tax evasion and what is tax avoidance. Please hit the subscribe button and join us for more informative lectures on different aspects of our business world. Thank you.